Why is everyone suddenly treating Bitcoin like it's too big to ignore? When a derivatives trader with decades of experience in risk management tells you Bitcoin is the greatest asymmetric bet in history, it's time to pay attention. In this clip from the TFTC podcast, Joe Bryan, former Goldman Sachs trader, current advisor at Antillon Capital, breaks down why Bitcoin isn't just another investment opportunity. In today's discussion, we'll examine three central points: how Bitcoin represents an unprecedented risk-reward opportunity, why holders never want to exit their position, and how traditional markets are missing the bigger picture. Before we continue, if you enjoy these breakdowns, hit the like and subscribe button for more TFTC content. Full episode linked below. What makes this conversation particularly compelling is how Bryan's final insight challenges everything we think we know about market psychology. But first, let's understand how a professional risk manager came to see Bitcoin as the ultimate asymmetric bet.
Gambling doesn't interest me. I like watching sports, but I'd rather not have money on the sport, have a little bet or something like that. But it's purely just for interest's sake. The risk reward comes from, you want to sharpen your skills and be able to take the right risks at the right time and appropriately size what it is you're risking based on your confidence of the outcome. And Bitcoin just blows everything else out of the water. I mean, it is just the biggest asymmetrical bet of all time.
Joe Bryan's analysis here crystallizes why Bitcoin represents the largest asymmetric bet in financial history. Drawing from his extensive background in risk management at Goldman Sachs, Bryan makes a crucial distinction between gambling and strategic risk assessment. When he talks about sharpening skills and taking the right risks at the right time, he's describing the methodical approach that professional risk managers use to evaluate opportunities. This isn't about rolling the dice. It's about understanding risk-reward ratios at a fundamental level. At 1031, we see this type of analysis daily, but Bitcoin stands apart. What makes Bryan's perspective particularly compelling is how he arrived at this conclusion through years of evaluating traditional financial risks. When he declares Bitcoin as the biggest asymmetrical bet of all time, he's speaking from a place of deep understanding about how risk and reward are typically balanced in financial markets. This first argument about Bitcoin's unique risk-reward profile sets the foundation for understanding why it's fundamentally different from any other asset in history, but what happens next in Bryan's analysis reveals something even more fascinating about Bitcoin's impact on investor psychology, a transformation that challenges everything we think we know about investment behavior. And by the end of our discussion, you'll see how this psychological shift is creating a global wave of adoption that's impossible to ignore.
It's even better because what the financial markets don't understand is that once you've walked through that door, that you're never going back, ever. And so it's unlike any other asset that's ever existed. And so, sort of I'm monologuing here, Marty, but it's like, when people, and it touches on MicroStrategy and things like this as well. When the price goes up, the financial markets think people are going to sell. That's just not how it works. That's not how it works with Bitcoin. I've gone through that inflection point, and I'm sure you have as well, where I go to bed at night worrying I don't have enough, not that I have too much, right? And getting annoyed when the price goes up, and smiling when it dips 10%. It's you reach that sort of point, and you know that you're not the only one.
The psychological transformation Bryan describes here directly proves our second argument, that once people truly understand Bitcoin, they never want to exit their position. He's highlighting a phenomenon that completely inverts traditional investment psychology. Instead of worrying about having too much exposure, Bitcoin holders consistently worry about not having enough. This isn't just anecdotal. It's a pattern that repeats across different types of investors, from retail to institutional. The traditional market expects Bitcoin holders to behave like typical investors, taking profits when prices rise. But as Bryan explains, this assumption fundamentally misunderstands Bitcoin's unique position. Everyone knows about Fold. It's the app where you can earn the most Bitcoin rewards for everyday purchases. Fold now lets you double stack rewards with gift cards. Use your credit or debit card to buy gift cards and earn both credit card rewards and sats. Fold gift cards help you grow your stack with every purchase. If you're not shopping with Fold gift cards, you're leaving sats on the table. Get a 20,000 sat welcome bonus. Go sign up now at foldapp.com/Marty. His personal experience of going through this inflection point mirrors what we've seen countless times. a complete reversal in how people think about money and value storage. This mindset shift is crucial because it explains why Bitcoin isn't just another asset class. It's a one-way door that fundamentally changes how people view wealth preservation. But what makes this particularly significant is how this psychological transformation is now spreading beyond individual investors to institutions and even nations, creating a paradigm shift that's about to challenge everything we thought we knew about global finance. Stay tuned for our final segment, where we'll explore how this transformation is creating an unstoppable momentum in global Bitcoin adoption.
The social stigma of being associated with Bitcoin is gone. It's now turning into, I think, the opposite increasingly. If you're not thinking about this for your self, for your company, for your country, you are at risk of being left behind. And, especially with the, MicroStrategy and MicroStrategy have done a tremendous job of raising the profile of Bitcoin from a, company perspective. But at some point, it does tip to being you are obligated to be thinking about this and planning for a Bitcoin future. Otherwise, you're not fulfilling your fiduciary duties. And the same applies to, increasingly you as individuals. Right? Especially when you start seeing legitimacy coming down from above. We've gone from individuals holding it almost straight to nation states. And now we're sort of filling the gap in the middle, right? And when your government turns around and says the government's buying Bitcoin, that is a stamp of legitimacy for the uninformed population.
Bryan's analysis here directly addresses our final argument about how traditional financial markets fundamentally misunderstand Bitcoin's one-way door aspect. The transformation he describes represents a seismic shift in global financial thinking. When he talks about the disappearance of Bitcoin's social stigma, he's identifying a crucial turning point, the moment when not having Bitcoin exposure becomes riskier than having it. This validates our earlier points about asymmetric risk and psychological transformation, but now we're seeing it play out on an institutional and national scale. What's particularly fascinating is how this adoption is happening simultaneously at both ends of the spectrum. You've got individual investors at one end and entire nations at the other, with corporations and institutions now scrambling to fill the middle. This isn't just about MicroStrategy's bold moves, it's about a fundamental shift in how financial institutions view risk. When Bryan talks about fiduciary duties, he's highlighting how the traditional financial market's understanding of risk is being turned on its head. The legitimacy that comes from government adoption isn't just about validation. It's creating a feedback loop that reinforces both the asymmetric bet thesis and the one-way door phenomenon. Traditional markets expected Bitcoin to follow conventional investment patterns, but instead, it's creating its own gravity, pulling in players at every level of the financial system. This perfectly demonstrates why the traditional market's understanding of Bitcoin is so fundamentally flawed. They're trying to apply old rules to something that's creating entirely new ones. The stamp of legitimacy, Bryan mentions, isn't just about acceptance. It's about the recognition that Bitcoin represents a paradigm shift in how we think about and store value. As more institutions and governments come to this realization, it further reinforces Bitcoin's position as not just an investment opportunity, but a fundamental transformation in how we approach money and value storage. What's your biggest concern about Bitcoin's future? Let me know in the comments. I read every single one. And if you found Bitcoin's asymmetric bet potential interesting, you'll want to watch our analysis of Bitcoin ETF risks and market dynamics. Click the video on your screen now. Don't forget to like and subscribe for more daily content. Thanks for watching. Stay humble. Stack sats.